Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, thank you for joining us. Welcome to the program. Now, it does seem like sentiment on oil markets right now just continues to ebb and flow.
It really does, and let's look at both markets. You know, in Brent, you got a lot of demand on the front end. The next 27 months are in backwardation, so the futures curve is trading underneath the front month. It just seems like the continued OPEC compliance and expansive global demand is keeping front-month contracts up. And then on the WTI side, it's almost the opposite, where there just seems to be a complete glut of inventory that's really putting pressure on that front-month contract. And that's what explains, the $6 spread between WTI and Brent. But I do believe by January or February, we'll see a much tighter market between the two.
So how would you be playing oil right now? Are you long crude or WTI on the expectation that perhaps we will get an extension to those OPEC production cuts?
Yeah, well, I'm playing it two ways. I mean, I have been net long petroleum all year, and so that has not been pretty. It bounced back. That's good. But beyond that, like right now, I'm looking to January specifically, buying WTI and selling Brent. I think that spread in January makes a lot of sense, and at some point we'll see that spread compress.
Mm-hmm. All right, let's talk about the market more broadly there today. Obviously continuing to kind of move higher. We're in the midst of earnings season right now, but it seems like the market is a little hesitant to push even higher from here. Perhaps it's feeling a little tired. I mean, it doesn't seem like we're seeing huge moves in either direction right now. What are you making of these levels?
Yeah, I think these levels, like the reflation narrative, what's been driving this market the past few months, is simply taking a pause and maybe even like it's changing a little bit at the margins, as it were. I mean, global growth or nominal real growth has been solid. Inflation numbers have come up a little bit, but right now everything seems to be a little bit neutral. We're going into an earnings season. The market has, really picked up a lot of steam, and I think it's very normal just to sit around and wait for the next news flash to come out, because I think the reflation narrative is just getting a little bit long in the tooth. And
of course, the market at these record levels at the moment, we're all hoping that earnings are going to be able to justify these lofty valuations. But do you think investors have every right to be a little nervous at the moment?
Yeah, I mean, I think they do have a little bit, to be nervous about, especially in the U.S. markets. I mean, let's face it, valuations are high relative to the rest of the world, and we are, very long in a cycle. I mean, long cycle doesn't mean end of the cycle, but the fact remains, if something should turn, given the fact that we're, pretty far into this economic expansion and we have high valuations, if that should turn, we'd be the first ones to drop. So, be concerned about that. I think we also have to be concerned that, growth figures have been very, very good, but it's to the point now where I think the market's taking it for granted. And what should happen if we start getting a bunch of industrial production numbers, PMI numbers, et cetera, that start to change or become, a little bit negative at the margin? I think that could, cause some fear in the market. When it comes to earnings, I think the hurdle rate for this quarter is low. I think the market's looking towards 2018 at $140 a share, and that's given no tax incentive into those numbers. So there is a lot to be nervous about, but nervous markets tend to go up.
What about the VIX index? Because it seems to obviously continue to be pretty low there and remain really depressed. And I remember talking just yesterday about this, the fact that the market has continued to go up, but the VIX index has actually been pretty stable, and to some degree that's a little concerning. How much is that a factor at play here around perhaps your concerns looking forward?
Yeah. No, that's a great question, because, asset volatility tends to trade in regimes, and those regimes tend to be a lot longer than any of us expect. I mean, who would have expected the VIX to be as low as it is for as long as it is? I mean, that's unbelievable. And I think, the takeaway to that is that it's not like it's going to turn anytime soon. I mean, it could, but what I think the takeaway is that when it turns, it's really going to turn because, implied volatility in all asset classes right now is very, very cheap. And I think that's just a pointer to the lack of liquidity in the market. Perhaps not the lack of fear, but more about the lack of liquidity.
Of course, we haven't spoken about central banks yet either, Larry. We've got the, the rate hike cycle at play here, and recently we saw those inflation numbers coming through pretty tepid, although it seems like the Fed is still willing to look through that stubbornly low inflation and continue to hike rates. Just your view, I suppose, on what the market's expecting to see here and whether, in fact, you think we'll still get a December rate hike.
Yeah, I think the market is pricing in. Last I looked, there's about a 75–80% chance of a rate hike in December. I think that's factored in. I think the numbers are definitely good enough for that to happen. Inflation tends to be something that no one understands, and that's an age-old question. Nobody's ever understood where it came from, but we do have to realize that at some point inflation will rear its ugly head. But that said, I do think the market also believes that the Fed dots for 2018 and 2019 are completely out of sight, too high, that we're just in a market that's going to be lower for longer and it's going to grind away. I mean, we're just in a different market, and the tools that they're using to judge a normal interest rate are just antiquated at best.
Fantastic. Larry Sherv, a pleasure as always. We'll leave it there. Thank you very much.